Let's say you have an idea of how markets move, you know there's indicators, fundamentals and news announcements at play, and you get how margin and risk management works. Most of us who are having a proper go get to this point, but it's not enough to know these things. Now you have to apply it all every time you trade. That's what makes trading hard. It's an ongoing application of consistent rules, and I'm not talking about strategy rules. Here's my 10 tips on becoming a better trader. Number 1, pick a market or two. Trading anything means you might miss key anomalies, specific knowledge, and elements that only a truly dedicated trader would know about that market. When I say pick a market, I'm not just talking about selecting just anything and hoping. I'm talking about dropping into the elements like a paratrooper, defining every single element that that market can offer so you can survive the treacheries it will bring. Here's an example of what I mean. Those who follow my channel probably know that I trade the DAX, or the German 40, as a main focus. By trading the DAX, I understand several key elements that generalist traders may not know. Things like open and close times, reactions during other market open times, reaction to options expirations, the lead up to and from end of month or quarter, the response to daily and yearly pivot points, and a combination of all of these elements together, specific to the DAX. Layer on your traditional indicators and intermarket conditions, and you're starting to get a detailed knowledge of how this market might respond, compared to that of a trader who might just hope for the best with general knowledge of the markets. When you focus on a couple of markets, you get to know it more intimately and get a feel for what might happen next. This detailed, in-depth knowledge can help bring better outcomes. If you can control just 1.5% return per month with consistency, that's 18% return per year, which is up there with the best of them. Number 2, goals. Define a percentage goal for the year and split it into quarters. Some months may not be profitable. Setting a goal for a quarter is far more reasonable, and you won't be mentally destroyed for having one month that isn't positive. Setting a goal to fit the task, that is, a long-term goal for a long-term game, will make hitting realistic targets more reasonable and achievable. Remember that if you can consistently control and return around 20% per annum, you'll be up there with the top performers and be able to get roles or funding in the future. I sometimes feel like I'm having a bad run, but then I look at the quarter to date results and it's basically on track. Perspective helps to stay in line with the long-term vision, even when there's a few trades that aren't going your way. Number 3, scripting. Creating a script on your platform in line with your risk management can take a lot of the in-the-moment pressure off you. I sometimes use a script that I drag onto the chart to place my order. It asks the percentage risk and size of the stop, and then enters the trade accordingly. It has a preset stop size input, since it's usually about the same, but it can be adjusted if required. This ensures each trade is in line with your risk management policy, allows you to wholly focus on the entry timing and calculates the rest. By removing that thought process of risk amounts altogether, you remain clear and focused. ChatGPT can help write MQL4 or 5 fairly easily, but be sure to test it thoroughly before using it live. This goes for other platforms as well, such as NinjaTrader. Number 4, patience. Being out of the market is often more impactful than being in it. Holding out until your entry is undeniably good can help eliminate getting into a lot of trades that didn't deserve your attention. Undeniable trades show up every month, but some weeks might seem a little barren. Those who can remain patient and lay in wait for the market to move into that position will be far more relaxed than those who are holding trades that are going against them that looked okay. 5, pre-market check. For markets that have set open and close times, like indices or stocks, researching and running a series of checks before the market becomes active can have a big impact on your analysis. Checking the day of week, date of month, previous year's reactions, position in relation to Bollinger Bands on multiple timeframes, and multiple timeframe support and resistance can avoid you getting into clearly obvious invalid trade setups. It can give you time to check for upcoming news announcements and anything else that might impact trade for the session. Number 6, write down your trade plan. To avoid 2020 hindsight, get ahead of the game and dissect your thoughts pre-market compared to post-market outcomes. Write down your thoughts and reasoning before the session open and see how far ahead you can predict what really happens each session. You can't go back to a written plan and say, I knew that would happen, if it isn't there. Write what you know before the session and improve what you write over time. This allows traders to reflect on what they see before and after the trade to help refine what needs to be written and what to take notice of in the future. Number 7, reflection. Reflecting on your trade plan can help outline if your analysis was correct or perhaps your gut feel in the moment was more reliable. This will help you determine whether you can trust your gut in the moment or trust your calmed pre-market thoughts more. 8, self-mastery. All traders are humans. Even those that stem from an algorithm or even AI come from a human at some point, or at least the controlling entity from a financial perspective is human. Thus, mastery of yourself is an important element of becoming a better trader. This comes down to giving yourself the right nutrients, staying fit and healthy, being clear of mind are all elements that could help you improve your trading outcomes. Number 9, continue learning. Gather statistics, observations, get coaching, and continuously develop your skills as a trader. If you haven't yet gained consistency and control over your money in the market, you aren't there yet, so keep learning. Number 10, combine it all. One of these tips alone will do almost nothing to improve your outcome long term. Combine each element and be the best you can be. Leave no stone unturned and strive for success. Find a way to implement every advantage you can. Keep a vision board above your trading desk, along with key sayings you find helpful to keep you on track when in the heat of the markets. Make it clean and specific to your true goals so you can remember why you should be patient, why you are doing this, and that getting money right now isn't necessarily the goal. Remember the reason you're doing all this work. It's different for everyone, but a few examples include freedom of time, freedom of location, a brighter future for you and your family, buying things you want, owning your own home, reduced financial stress, and much more. If you enjoyed this video or took something positive from it, please hit the like button below. It lets me know this is helping others. To see more great content like this, please subscribe, hit the bell icon, and stay updated with the latest.